Hello everyone, how are you all? I am Dr. Labib from Dr. Labib Academy. In continuation of our ACCA subjects, F6 taxation, F8 audit and assurance, F7 financial reporting, SBR, I am starting this series of financial management. Fine. I'm starting this series of financial management, and this series will be applicable for all the exams. We are going to continue sequence wise. It will be numbers will be there on every live session video that will be posted on my channel. I kindly request you to subscribe to this channel, share this channel. Hope how you have understood and enjoyed other subjects, F6 taxation, UK taxation, financial reporting, audit and assurance, and SBR. Hopefully you will also enjoy and you will get benefit. You will succeed in this paper also. So this is for ACCA financial management, applied skills. Is that right? Applied skills. The financial management paper consists of 3 sections: Section A, Section B, and Section C. Section A consists of 15 MCQs, 2 marks each, it comes to 30 marks. Section B, scenario based questions, 15 MCQs into 2, it comes to 30 marks. And Section C is 2 questions times 20 marks, it comes to 40 marks. The total is going to be 100 marks. And the passing percentage is 50 marks. Financial management is very interesting, calculative, and most importantly, it is really make the difference. As a chartered accountants, as a ACCA, you should have this. How best we can work out with the finance, what are its objectives, what are the functions, and what are its accountability. What are the responsibilities? I can put in this way. What are the what decisions we are going to take, and which decisions it has to be worked it out. So in this entire module, it continue till the things which have been covered. First, I will cover Section A, then I will cover Section B, then I will cover Section C. Because the moment you do Section A, Section B will be easy. The moment we do Section B, Section C will be a much easier for us. Because Section A talks about the basic core concept, fundamentals, principles. Section B is application. Section C is analytical. Okay. So this is the way things has to be progressed. Please subscribe to this channel, share this channel, give your comments, and press the bell icon. The moment I will post the videos regarding to this, you will get notification, and like this channel. Fine. Coming back to this financial. This see we are starting from the this is session 1. Okay, this is session 1. Sequence wise I will go, and in the description also I will put the things as per the requirements. Before you just cover the lectures, theoretical concepts, I will relate the concept with the theoretical ones, and then explain you how it is going to be worked it out. we are first talking about something related to financial management functions. What are the functions of financial management? What financial management related will, how we are, what is the framework, what are the decisions, what are the things we have to cover, what comes in our purview, overview, how we have to work it out. What they say, see the thing. They are talking, when we are doing the objective type questions, read all the questions, options. That's very important. Don't come to a conclusion. You find, you know, question option C is right answer. But when you say option C is right answer, don't forget to read option D also. Don't come to a conclusion before to the answer before you are going to evaluate all the options. First you have to evaluate all the options and you have to take the best one. In relation to the financial management of the company, which of the following provides the best definition of primary financial objective? What is the primary financial objective? What is the basic objective of financial management? See, when you are talking about that, there are two objectives. The one objective is, I will write here, there is a profit optimization, profit and wealth. Is it? Now, profit is more or less related to accounting. Wealth more or related to financial management. I cannot say more or less, it is very much related to financial management. This is the first question we are doing, and this question will be applicable for even for financial management and advanced financial management also. Now you have to measure which is it. To achieve a long-term growth of earnings, is it? To achieve a long-term growth of earnings. To maximize the level of annual dividends. To maximize the level of annual dividend. To maximize the wealth of the shareholders. That's nowadays people are not concerned about profit. People are concerned about wealth. You also, this is the one thing. You have invested. What happens? You are talking about the value of the share value. You always take into financial management always takes into consideration the market value. The market value is the paramount when we talk about the financial management. If you see earning growth to achieve long-term growth, it is a to achieve it is a supportive, it is a secondary. To maximize the level of, see, if you have the profits, if you have the wealth, if you have the retained earnings, automatically you can think over it. If you have reserves with you, is it right? If you have reserves with you, if you have growth is there, is it? Wealth is there. Automatically the market value is more. When the profits increases, the wealth will also increase. When the profits increases, the market value increases, share value will increase. When the share value is increasing, the market value will also increase. What is the wealth? We are talking about what we are taking into consideration the number of shares times market value. Is it market capitalization? Fine. Market cap. To maximize the level of annual profits is basically, see, when you are financial accounting, there is quite a core difference between financial accounting, financial management and management accounting, as well as cost accounting. You should be very clear in these aspects, which are related to financial management and which are related to others. So others are, again I will write here, is it? Others are Others are secondary objectives. Okay, others are secondary objectives. The right answer is what? The right answer is the maximize the wealth. Next, indicate by clicking. See, you with one question you will have. I will explain you the related questions also. By the time you will go to the mock examination, you will not have any doubt in your mind. You can do it straight away without my support also. By the way, I will going to post one session on mock exam also. Indicate by clicking in the relevant boxes whether following objectives are financial or non-financial. Is that financial? Maximization of market share. Market share is nothing but you are increasing. Is that? You are increasing. You are increasing the number of customers. Is that? When you are talking about marketing or market share, is it right? You are talking about the market share. What happened? It is in the number of customers. Is it number of customers? It is number of products, number of services. Is it a number of services? This is fine. This is a non-financial. Okay, this is a non-financial. Earnings growth, but the name earnings says it is financial. Is it earnings growth? EPS, earning per share. Is it profits after taxes? All these things matter. Sales revenue growth. Sales is related to finance. Achieving a target level of customer. This is qualitative. Okay, this is qualitative, right? Means your customer satisfaction is a qualitative. It is a non-financial. Achieving a target level of return on capital employed is a ROCE. You have done. Is a return on capital employed. Profit before interest and taxes divided by in the ratio analysis. Is that in the ratio analysis we have done ROCE. Is it? In the ratio analysis we have done profit before interest and taxes divided by capital employed. It is a financial. Okay, this is, you have to be very clear about the things. Which three of the following are the main types of decisions facing the manager? See, what are the first you should know what are the decisions financial manager will take. Financial manager will take, is that there are 4 decisions are there, is it right? Financial manager will take investment decisions. Financial manager will take dividend financing decision, is it right? Financing decision. All these things we will cover over the period of time. Financial manager will take dividend decision. And more importantly, the last one which is not mentioned, it is related to working capital decisions. Means you have the investment decisions, you have the dividend decisions, you have the financing decisions. Appraisal is appraisals is a subdivision. Is it? It comes under is a subdivision of the investment decision. Okay, of investment decisions. Is it? And with respect to the budget decision, budgets are management accounting. Income decisions are basically, we have been talking about the income decision. Income decisions is how much you are in terms of what it comes in with respect to. It is a subdivision, subcategory of investment decision. Okay, next. Slowly, as I basically see, if you have to be the moment you find any time any doubts, just go with first one is very specific. Which of the following is an example of a financial object that the company might choose to pursue? Is it financial objective? Is it dealing honestly and fairly with all customers? Is it right? This is not a financial. This is non-financial. You are dealing with, is it non-financial, or you can put it as qualitative. Provision of good working conditions. Again, see, it is. See, we can't say that it is not, and it is indirectly related to financial objective. Is it right? It is non-financial. Nowadays people are very much talking about environmental accounting. Okay, environmental accounting is taking precedence over others, is that, and we will cover in good detail about the producing environmental friendly. You should not use plastics. Is it electric cars? Is it the emergence of electric cars, the emergence of electric scooters, the emergence of electric vehicles? Is it right? This is also a non-financial. Whereas, okay. Whereas if you take the things into consideration, restricting the level of gearing. Is it? What is the gearing? Gearing is nothing but debt divided by debt plus equity, or debt divided by equity. You should have you should have a very comprehensive knowledge about financial reporting. Okay, ratio analysis. It plays a very important role. What is the financial objective? The financial objective. This is the financial. How? See, because when you have the gearing is it how much you have to borrow, how much you have to invest. Financing decisions. Is it right? It comes under which type of decision? It comes under financing decisions. Is it correct? It comes under where? It comes under financing. Now, value for money is important objective. What is the first? You should know what is the value for money. Okay. The first thing is we should know that what is the value for money. If you have done audit and assurance, is it right? In audit and assurance, we have value for money audit. Same concept. Is it right? Same concept. We are not. What is the value of money audit? We are talking about economy. We are talking in terms of economy. We are talking about efficiency, and we are talking about the effectiveness. Is that 3 E's? Is it that if you have done audit and assurance, it is very much value for money audit. Is it right? This is what is it? What the economy talks about? Economy talks about the cost, how we have to minimize the cost. Is it right? How we have to minimize the cost. Fine. Next, what is the efficient? Efficient is resource utilization. Is it? It talks about resource utilization. And what is the effectiveness? Effectiveness is nothing but the overall objective. These are, see, they will ask you, these are the current concepts which has been introduced. Is it right? Now, which of the following is important objective for not-for-profit organization? Not for profit. Is that not proper? Which of the following is consistent with increasing the value of money? Using cheaper source of goods, is it? Using cheaper source of goods and thereby decreasing the cost. See, it is not, see, you are talking about, see, it will not achieve overall objective, is it right? It will not achieve overall objective. Searching for ways to diversify finances for not-for-profit organization. Yeah, we are not searching ways to diversify finances. See, profit or organization diversification. That if you talk about what? If you talk about the profit-oriented organization, the concept is diversification. Not-for-profit is basically a social service organization where we are not talking about the diversity. Decreasing the waste in the provision of a service but by the non-profit organization. Decreasing the waste. Is it right? When we are saying it is a decreasing the waste, definitely what will happen? We are not only talking about the economy, is it right? We are not talking about the economy, but also we are concerned about efficiency. What is the economy? Economy is cost minimization. Efficiency is resource utilization. When economy and efficiency will work out, it automatically leads to what? It automatically leads to effectiveness. Focusing on meeting the financial objective. What is the financial objective? Financial objective is the wealth maximization. Profit or non-profit organizations are not concerned about the wealth. Non-profit organization doesn't want, they are not thinking about the goods and services. Even they are distributing goods as such. They will distribute the goods with a quality perspective. Searching for waste, even it is. The correct answer is what? The correct answer is C. Which of the following is least likely to fall with financial management? Dividend payment, dividend decisions. Okay, this is the function of financial management. Is a dividend decision. Financing decisions. Funds are raised to finance investment project. Financing decisions and investment decisions. Surplus assets are sold off. Is that surplus assets? This is what you are writing off the things, any surplus assets. Is it right? This is also with respect to what? This is also with respect to, you can put it as investment decisions, or you can put it in as the understanding goes. Fine. Non-executive directors are appointed to the remuneration committee. This is you have done in your audit and assurance. This is the audit committee. This is the audit committee. What they say? They are least likely to fall. Is that least likely? See, we are not talking about the thing. What is the least? What is the minimum impact? Is it right? This is what the answer says. Is it? And most importantly, it is related to what? It is related to corporate governance. Next. Hopefully you are understanding. Very simple, very good. Indicate by clicking in the relevant boxes whether the following statements are true. Financial management is concerned with the long term, 100%. Showcasing of finance. It is not a short term. It is a long term. That is why the capital investment decisions. The moment you are talking about investment decisions, it is a long term. It is not a short term. True. Management accounting is concerned providing information. See, what is the management accounting? It talks about the internally. Is it? Management accounting is basically what? Internally. more day-to-day functions is the providing information for the day-to-day decisions of control and decision making. Is it true? Financial accounting is concerned with the information about the financial accounting talks about what? Talks about the past. Financial statements. Is it? If you take into consideration financial statement, that is the reason we are talking it is about it is a historical cost accounting. Fine. Next. Which of the following tasks would typically be carried out by a member of a financial management team? Evaluating proposed expansion plans. Is it? In terms of what? In terms of investment decisions. Evaluating. Is it? Reviewing of overtime spending. See, it is reviewing. It is basically, if you take very clearly, it is related to management accounting. Okay. Depreciation of non-current assets. The depreciation of non-current, it is related to financial accounting. See, this is the way I will teach, okay? I will give explanation for each and every option. Apportioning overheads to cost unit, this is related to cost accounting. See, in this way, what we have learned, in this way we have covered all the aspects. This is related to financial management. Is it? Everything is there. What is related to financial management, what is related to management accounting, financial accounting and cost accounting. Which of the following is an example of internal stakeholder? Stakeholders. You have the stakeholders. Is it? Now who are the internal, who are the external? Company directors are internal. Okay. Customers are external. Suppliers are external. Finance providers are also external. What is the main purpose of what the corporate governance? Corporate governance is nothing but how the company is managed and controlled. Simple definition. How the company is managed and controlled. Now, what happens, what the corporate governance says, to separate ownership and management. We are not, see, this is what it says, it is agency. Is it? This is related to agency cost. Managers are the agents of the owners. Is it right? Managers are to maximize shareholder value. This is related to financial management. You have to be very specific to facilitate effective management of organization and to make organization more visible, accountable. What is what is the concept of corporate governance? How the firm is managed and controlled. That's the way we have to do. How we are going to facilitate the management. To ensure the regulatory framework, we are not talking about, see, this is related to compliance, okay? This is related to compliance, how we are going to follow the thing. The answer is what? The answer is C. The agency is a driving force behind the growing importance attached to sound corporate governance. In this context, who are the agents? See the thing, very simple. Who are the agents? See, shareholders are the principals and managers are the agents. Okay, managers are the agents. Which two of the following statements are correct? Okay, friend, which two of the following statements are correct? Maximizing market share is an example of financial. No, we should not maximize market share. Maximizing the wealth. Shareholder wealth maximization is the primary financial objective for the company on a listed stock exchange. Is that if you take UK, we call it as a public limited company. Is it right? We call it as a public limited company as such. Which has been listed on the stock exchanges. Financial loss should be quantitative so that achievement can be measured. We have to measure, is it? We are not talking about the qualitative. We are not talking about the qualitative are secondary. Quantitative are primary. Fine. Now, 3 E's are used as performance measure to assess value for money. Fine. Is not for profit organization. The 3 E's stand for economy, efficiency. No, it is not environment. Is it right? It is not environment. It is instead of environment, it is effectiveness. Which two of the following are efficiency targets? What is the efficiency? The overall objective, is right? Is not for profit organization might put in place. Yeah, which of the following are efficiency? What I told you about the efficiency? I told you about when they are talking about the efficiency. Efficiency is nothing but converting inputs into outputs. Okay, efficiency is nothing but what I have written there in the efficiency in the previous case. I have efficiency is nothing but resource utilization. Is that efficiency is nothing but resource utilization. Converting inputs into outputs. We should know what are the inputs and what are. Is it a reduction of wastage of paper? Is a resource utilization. Pay rates for staff, level of qualification. Is it? We are not talking about the. Is it? We are not talking about the pay rates for staff. Staff utilization. Staff are the inputs. Is it? If you involve staff, automatically it leads to outputs. Customer satisfaction ratings. There is nothing like input. It's only an output. Pay rates is also an output. It is not inputs to outputs. Fine. The answer is A and C. Managerial reward scheme should be help ensure manager to take decisions which are consistent with the objective of shareholders. What are the management reward schemes? There is a commission, bonus, employee stock option plans. Is it? We have we are talking about executive share option schemes are there, ESOPs is there. Is it? These are the reward schemes which help managers to take, which are consistent with the objective of the. Which 3 of the following are characteristics of carefully designed remuneration? Linking rewards to changes in, yes, if your wealth is increasing, the management rewards will also increases. Matching of manager time horizon to shareholders time horizon. You are matching that how the managers are committed to the firm and to the objective of the shareholders. You have to match it. Possibility of manipulation by managers. Definitely by itself you can say it is not related. We cannot have the possibility of manipulation. Encouragement of manager to adopt the same attitude to risk as shareholders. We should see what happens. See, these are the agents. Is it right? These are the principals. These are the shareholders. Now what happened? There will be a gap. There is no doubt. But the gap should be less, okay? The gap should not be more. There is a indifference, but you should not have more indifference. You should have minimum gap. Is it right? You should have a minimum gap of understanding. Is it right? Encouraging the same attitude as that of the thing. Motivation to primarily achieve the. It's not a financial management is not a short term. It is a long term. Okay, the answers are what? The answers are A, B, and D. Again, executive share option scheme. By clicking the relevant boxes, which of the following are typical criticisms of ESOP? When directors exercise their option, they tend to sell the shares almost. See, there is a lock-in period. Is it? Usually, the lock-in period will be for 3 years. Whenever you have executive share option schemes, is there share options? Executive share option plans, is that employees share or ESOPs, employee share option plans are there, is that you are rewarding the managers with the shares to make sure that they should also feel that they are the owners. The moment they feel they are the owner, nowadays this is the common criteria that has been adopted throughout the world, multinational companies. Is that when you are talking about the things, they will say that yes, we are giving you the shares. Automatically they will say yes, we are part of the company, and they will work more. Is it? If what they say, is it a criticism? It is not a criticism. When directors exercise their option, they tend to sell the shares. Almost, you should not sell the shares immediately. You have to follow the lock-in period. This is one of the criticisms. The director doesn't want that there should be any hold over the shares. Okay, they should have that flexibility, but it is not so. If the share falls if share price falls when options has been awarded, and the options have no value, they cannot act as an index. See, you are giving an option, but when you are giving an option, they should have some value. Is it? They should have, when you are giving, when the price of the share will fall, definitely what will happen? The options will not have any value. Is it right? See what happens the moment you issue the shares. Is it right? The market value will remain same, but market value per share will decrease because the number of shares are increasing. Is it? The number of shares are increasing, and it is not going to be supported as an incentive. Directors distort reported profits to protect share price and value of the share option. Definitely. See, there is a possibility. We cannot say that this is going to be the case as such. There will be a manipulation. That is what it says. We are talking in terms of accounting, where we can have a window dressing. Is it right? There will be some things can happen. Is that? That is remote. Is that? It is also a criticism. Next, the directors of Portico PLC has recently engaged a firm consultants to negotiate standard terms of trade for one of the strategic business units. This includes the agreement of Portico to pay 5% penalty for late invoice. Who is going to give us invoice? The invoice will be given by the suppliers. The policy is an illustration of the company concerned for which, this is the directors of Portico have recently engaged a firm consultant to negotiate standard terms of trade of one of the strategic business units. This includes the agreement of Portico to pay 5% on the late. Means you are engaging and any payment, you have to pay a 5% penalty. is in for which type of major shareholder? Is it lenders? Lenders will give you loan. Banks. Is it a suppliers? Suppliers will supply. They are this party is directly related to invoice settlements. Customers is a, we are not customers are we will sell it. Okay, trade unions. There is no relation to the trade union. Answer is what? Answer is under the terms of UK Corporate Governance Code, what are the only type of directors permitted to sit on the company's audit committee? When you are talking about the audit committee consists of independent non-executive directors. We have studied in audit and assurance. Is it? Independent non-executive directors are only eligible for that. Non-executive directors, is it non-executive, is it? Clarity is not that much. When you have the options and we have a clear options, go for a clear option. Executive directors, no way. Directors, see, with financial non-executive directors, with one non-executive director having financial qualification. One at least one NED should have financial qualification. We should not have, everybody should not, there is no precondition. Corporate governance, board of directors, composition of board of directors, 50% will be the executive directors, 50% will be the non-executive directors. See, now you should have a good understanding about the financial reporting, a good understanding about audit and assurance. When you have these two things, automatically financial management is 60% done. Which of the following you will expect to be the responsibility of the financial management? Producing annual accounts, it is not the financial management. Financial statements, is it? It is not. Producing monthly management accounts, this is with respect to what? This is with respect to financial accounting. This is with respect to management accounting. Advising on investment in non-current assets, is it right? This is the long term. This is the role of a financial management. And deciding pay rates of the staff, this is related to HR, okay? This is related to HR, long term. This is the, you have to give reasons. That's very important, okay? Next. Value for money is usually taken to mean economy, efficiency and effectiveness. It is false. Come dividends, it means the buyer is a share is entitled to receive dividend. See what happens when you are paying dividends. This will come late, okay? Don't just I'm giving you a brief understanding about that. Whenever they are giving the dividend declared, then they were sorry. Whenever they will declare the dividends, is it? Now, if when you are selling the share, is it right? When you are selling the share, we have to make sure that the share will come with the dividends or without dividends. If with the dividends, the value of the share will increase. If come dividends, is it right? If it is with come dividends, is it? The value of the share will be more. Is it? The value of the share will be more. If it is with, see, common sense, as simple as that, okay? Dividend, come dividend means the buyer of the share is entitled to receive the dividend shortly to be paid. The dividend payout ratio compare the dividend per share with the Magnum ratio analysis. Is that you have price earning ratio. Price earning ratio is nothing but you have the M market price per share divided by earning per share. Dividend payout is that you should have dividend payout ratio formula. Is that dividend payout ratio? Dividend payout ratio talks about which one? Is that dividend payout ratio talks about the dividend per share divided by profits available. Okay, profits available. This is not a market price per share. The agency problem is that the shareholder wealth is not being maximized. The agency problem is the shareholder. See, if there is a what is the agency problem? Agency problem is nothing but the conflict between managers and shareholders. Shareholders will say that their wealth should be maximized. The managers will say that the value of the firm should be maximized. Is it? Always there is a conflict. What is the problem? It means that definitely the shareholder wealth is not being maximized. It is true. Fine. This is with respect to the first session with respect to financial management functions. I have given it with complete explanations as best as possible. In the next session, I will start with financial management environment. Okay. Every session we will have one topic. But when you are coming to the next session, make it a point that you have a review of your study text with reference to financial management environment. Okay, thank you so much. Please subscribe to this channel, share the channel, and your comments are very important. And at the end, if you really find it's worthy, value added one, please like the channel. Thank you so much.